What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I am your host, Carolina Martinez Arevalo, portfolio strategist at the BlackRock Investment Institute. This week, we discuss the unique regional themes driving global corporate earnings. Corporate earnings growth has been out of sync outside of the US. We believe this divergence means that getting granular with investment views is key. The US posted 9% earnings growth in the last 12 months compared with just 1% for the rest of the world, according to LSEG datastream. US stocks have soared on the artificial intelligence theme and resilient economic growth. Even if forecasts are downgraded over the course of next year, as they tend to be, we expect a brighter earnings outlook globally than in 2024. The Magnificent Seven are still expected to drive US earnings due to AI, yet their lead should narrow as earnings growth broadens to a wider set of beneficiaries. As the AI build-out progresses, it creates investment opportunities and potential earnings growth in utilities, industrials, energy, and real estate companies providing key AI inputs. Resilient US economic growth and the prospect of looser regulation also underpin our positive view on US earnings. Japan's broad earnings growth has even outpaced the US over the past year. A sunnier macro picture due to inflation's return and shareholder-friendly corporate reforms are reasons for optimism. We think Japan's solid domestic outlook can keep driving earnings growth even as the yen's rise from its recent lows can weigh on earnings. Japan's domestic resurgence could also mitigate the hit from risks like greater US protectionism, in our view. In Europe, earnings for around half of sectors are still in decline, yet we favor sectors like financials as banks have outperformed due to higher interest rates and utilities as one of the few non-US beneficiaries of AI. In the UK, the Labour Party's election win hasn't renewed investor interest in the country like we expected. Earnings have also kept contracting over the past year. Here is our market take. We stay overweight US and Japanese equities as we expect their solid earnings growth to hold up. In regions with a more challenging outlook, getting granular is key. We see opportunities in sectors such as European financials. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com.